Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where we recap the last 24 hours in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 1st of December, 2020. Alright, let's get into it, everyone. So, price. ETH's been doing some really fun stuff the last day or so. We got back over 600. Looks like we are heading higher. I'm recording this before the eth2 Genesis, so many people in the ecosystem are expecting a kind of like Genesis pump or eth2 pump, for example, and we might see that, right? But it might just be a short-term thing. I think the general uptrend is the general trend is still up, of course. Bitcoin's basically at all-time highs. There is some debate over what the all-time high actually is, but generally it's accepted that it's 19,500 or above, and that's where Bitcoin's sitting at right now. As you can see here, it went even higher than that overnight. It went over here, it went to 19,840 on Bitfinex. That's almost 20k. So we can pretty much say that BTC is at all-time high, which is providing some amazing tailwinds for ETH as well, of course. So yeah, we have eth2, we have the Bitcoin all-time high, we have December, which is generally a really great month for ETH performance-wise. So yeah, that's why I said yesterday I think December is going to be really fun. So yeah, good to see ETH above 600 again. Nice to see Bitcoin up here in the all-time high area. Maybe we break through and then it comes back down to kind of like test the lows, test some sort of support again. But remains to be seen what happens there. As for DeFi, you can see the DeFi Pulse Index here is still trending up. I think December is going to be a really great month for DeFi tokens as well. They tend to follow kind of ETH. When ETH's bullish, DeFi is bullish as well, which makes sense from, I guess, a market sentiment perspective. And for those of you wondering, if you're watching, you can see these big, kind of like dump in the chart here on the DeFi Pulse Index, and then like it basically goes back up, instantly. This is actually not a bug or anything. This is real price action here. But what ended up happening was a whale decided to just market sell like millions of dollars worth of DeFi Pulse Index, right? Which tanked the price, and the price went back up. Now, the price of the DeFi Pulse Index isn't actually set by the secondary markets. It's set by the value of the DeFi tokens in the DeFi Pulse Index in SET protocol. So, we refer to that at SET as net asset value. So basically the value of all the real assets in the DeFi Pulse Index and not the secondary markets. And the reason why the secondary markets correct so fast is because when this happens, it creates an arbitrage opportunity between the net asset value on SET, where you can mint new DPI or redeem existing DPI, and the secondary markets where it's trading. So that's why you see these kind of like random, I guess it's not a pump and dump, but these random huge dump and then like a pump back up. It's not real price action or anything like that. It's just it's better to follow the net asset value than it is secondary markets, but they both influence each other to an extent as well. So yeah, if you're curious about that, that's why that happens there. So I think the biggest thing happening today, other than the anticipation of the ETH2 launch, is this announcement from Coinbase that basically they announced that early next year they're going to be doing ETH2 staking, and on top of that, they're actually going to be issuing an IOU token called ETH2 for people that want to basically have instant access to liquidity. So as everyone knows, if you're staking on your own, you send ETH into a deposit contract, and you stake on the Beacon chain. That ETH is locked for potentially 1 to 2 years until transfers are enabled on the Beacon chain, or until we have the merger between ETH1 and ETH2. Now, what Coinbase is offering, and what I expect every exchange to offer, is a flavor of this IOU, this kind of like derivative token that represents ETH on the Beacon chain. Now, there's a lot of discussion around this today on Twitter, and I do want to clarify something. I think a tweet here that I have summarizes it best, where Hasu kind of asks is like, so does it follow that ETH deposited on exchanges is no longer ETH but something else, or why is self-staked ETH considered ETH but delegated ETH is not ETH? And this is around basically saying, is the ETH that Coinbase is giving you, the ETH2 token, is that like an IOU or a derivative or actual ETH? And I argued that it's an IOU, right? It's a derivative product. It is not the ETH in the Beacon chain. It is a representation of that. Now, due to this, the IOU that the exchange produces called eth2 token or whatever, there could be one, there's going to be one on Kraken that they're going to have their own one, Bitfinex's going to have their own one, Binance will have their own one. Every exchange will have their own flavor of this. But this is not ETH, right? It is a derivative. Now, the ETH that the custodian stakes on behalf of users is real ETH, but this belongs to the custodian, right? Even though the users purchase this and it's kind of in their account and they have this IOU, the actual keys to this ETH, so when the merger happens or when transfers are enabled, the only individual the only entity that can withdraw this real ETH from the beacon chain will be Coinbase. So, and then I go on to say self-staked ETH belongs to the individual since they have the keys. So that's the key difference here, right? And I don't understand why this is so hard for some people to kind of like get their head around. The IOU tokens are nothing new, right? We saw this play out for things like Filecoin. So Filecoin had an IOU token trading for a long time before the real one went live, right? Before the network went live. Same with Polkadot. And even back as far as like the ETH ICO, I've seen that HitBTC actually had an IOU on ETH, right? Before it traded. So these are not real ETH. This should not be considered real ETH. It is an IOU/derivative. And that's it, right? There's no more arguments here. Like I think that is as simple as it is and as it gets. So yeah, I just wanted to clarify that point for people who might have seen the discussions on Twitter today. But back to Coinbase here, I think it's really positive to see this. Staking in ETH2 right now as it is still very involved and very technical. I'm not going to expect anyone that is new to crypto to get involved with this on their own. They're going to do it through exchanges. And I'm fine with that. I think that exchanges are just one party. There's going to be staking service providers. There's going to be individuals. There's going to be funds. There's going to be all these different parties. And there's worries that it's going to centralize to exchanges, and I actually don't think that's going to happen. I think that if the Ethereum community is so big and so vast and so dynamic, and differentiated from other communities, that centralization probably won't happen. There's still a risk, and obviously people are going to be monitoring it, but I think enabling this and letting more people get involved and have instant access to liquidity on their staked ETH is important, and it's inevitable. There's nothing we can do here to change it. We can't control these exchanges and said, hey guys, can you not do this? And even doing that would be disastrous, right? Like no one can say that, and if anyone even attempted to, the exchange is not going to listen. I guess that proves how decentralized ETH is as well. But yeah, some exciting news. I think we're going to see more exchanges come out with more news around this, in the future. And Coinbase's one isn't actually going live till early next year, so it's not live, today. It's not going to be live with the Beacon chain. Be live early next year for those of you interested in that. But I do encourage you to check out the decentralized alternatives that'll probably be live earlier than that. Like Rocket Pool, for example, is a very popular one. I think there's maybe one other that I can't remember, but and even better, I think staking on your own if you have the 32 ETH, and you're willing to lock it up for a period of time, is much better. But if you don't have 32 ETH and you're not willing to lock it up, even if you do, staking through an exchange and getting an IOU token is the next best thing for you, I think. So yeah, don't feel bad about staking on an exchange or anything. That's just the model that ETH2 has to design around is these exchange staking things, and and not everyone's going to be able to stake on their own, which is fine, I think. Right, really cool news out of Chainlink today as well. So Chainlink has brought this proof of reserve product to DeFi. So basically what it is, it's been designed to ensure the end-to-end transparency of the DeFi ecosystem, with the proof of reserve reference feeds that provide smart contracts with the data they need to calculate the true collateralization of any on-chain asset backed by off-chain reserves. So, obviously everyone knows Chainlink. They're the Oracle network. They provide feeds for a bunch of different things. And proof of reserve is actually something that Nick Carter's a Bitcoiner, had kind of coined the term. I think it was maybe a couple years ago at this point, where he wanted exchanges to prove their Bitcoin reserves, right? Because you can do this on chain. You can sign it as an exchange, say, okay, this is my address, or this is the exchange address, and this is to prove that we have as many Bitcoins as we say we do. Or this is the proof we're not doing fractional reserve kind of banking within our exchange. And I think this is kind of what Chainlink wants to do with proof of reserve for assets like wrapped Bitcoin that are kind of like, centralized kind of custodians. Like wrapped Bitcoin is in BitGo. You have like True USD, which is a stable coin, obviously. I think they've got like a tokenized gold here, and other kind of cross-chain assets as well. So yeah, really cool to see this out of Chainlink. It's a pretty detailed blog post here. So if you want to learn more, I'll leave a link to it in the show notes and the YouTube description, so you can go check that one out. All right, so we've been seeing a lot of these lately, right? These Y-earn mergers, partnerships, acquisitions, whatever. I think I've spoken about it on every single Daily Gwei Refuel I've done so far. And today is the biggest one yet. So Andre announced that Y-earn and Sushi are teaming up. Now, on the other Daily Gwei Refuels, I said that I think these are more like partnerships than anything else, and I still believe that. This isn't merger or acquisition. The Sushi token still exists. These aren't going to be kind of like absorbed into Y-earn. But what I think is interesting and what I've kind of changed, or kind of like, I guess, honed in on how I think about these things, is basically what Y-earn is doing is it's building an ecosystem similar to what Ethereum has done, right? So you can think of Ethereum as like the nexus, the center, and then around it you have all these different kind of things, right? You have like DeFi apps, you have DAOs, you have NFTs, you have gaming, you have all these other things like infrastructure, all this stuff, right? Where Ethereum's at the center and these things are surrounding it. Y-earn is at the center of their own ecosystem, and then they have all these other things around them too. So they have Sushi, Cover, Cream. They have there's probably other projects that I'm forgetting. And they're going to basically work with those projects very closely and bring everything in-house to iterate really, really quickly and to build their own kind of like DeFi ecosystem within the under the Y-earn umbrella. And what I think they're doing is they're basically, I wouldn't call these things distressed assets, but what they're doing is they're going for the underdogs here, right? So Sushi is obviously the underdog to Uniswap. Cover is the underdog to Nexus Mutual, right? Cream, underdog to Aave Compound, right? Y-earn couldn't merge with these other bigger ones. They just wouldn't do it, right? But the smaller ones, yeah, sure, they can get them on board. And I think what they're going to do is they're going to try and basically create a parallel ecosystem to one that basically includes, Maker, Compound, Aave, Synthetics, the bigger players, which I think is actually amazing for end users, right? The more competition, the better. But again, not mergers, not acquisitions, partnerships. The Sushi one's actually quite detailed. There's a lot of dot points here going through the synergies. So you have basically the usual stuff. Sushi and Y-earn is going to merge development resources, TVL. The Keeper network that Andre launched is also going to be playing a big part here. There's going to be some Sushi rewards paid out to pairs like Keeper ETH and things like that. So there's a lot going on here, right? And after seeing all of this, I've also been asking the question to some of my friends. I'm like, where does the value accrue here, right? Does it accrue to the Wi-Fi token? Does it accrue to the individual tokens of all these projects? If these projects are relying on Y-earn to succeed, then wouldn't their tokens kind of like bleed out or bleed into Wi-Fi basically? And I don't actually know the answer here. There are people on both sides. There's people saying that all these other tokens are now worthless because they are just like, they're nothing without Wi-Fi. So Wi-Fi is going to kind of like get all the value. But then if we want to make a comparison here, think about Ethereum and ETH, right? And think about the apps built on top. The apps built on top accrue value for their own ecosystems. So for example, Aave the Aave token has accrued all the value of the Aave ecosystem, and it's hard to argue if ETH has accrued that or not. Now, ETH is much bigger than Aave in market cap, right? So it's a lot harder to move. I think ETH is like 50 or 60 times bigger in market cap than Aave, right? 60 billion, 70 billion compared to 1 billion. So taking that into account as well, right? It's hard to say that ETH hasn't been a beneficiary of all this usage. Not directly, but just from a kind of like investor perspective, being like, okay, if all these apps are like generating all this activity on Ethereum, I'm going to buy ETH because I want exposure to that. Even though you actually don't get fundamental exposure right now, because if you did, you'd basically have EIP 1559 in where every time an app makes a transaction, or every time there's a transaction, some ETH gets burnt, and then fundamental value actually flows to ETH. But in saying that, you have ETH being used as collateral in these apps. So as these apps grow and offer more products to people, people put their ETH in, people are using ETH more, there's higher demand for ETH. That plays a part. But bringing it back, is YFI going to play the same part? Are each of these protocols going to have to pay a fee to the YEarn treasury, which goes and like buys YFI or whatever, or YFI has a claim on those assets in the treasury? I think that we might actually see that. And then if that's the case, why do the individual tokens accrue value from that point? So they would accrue value from their own ecosystems, just like all these other protocols on ETH accrue value for their own ecosystems. So yeah, remains to be seen. I'm not as bearish as some other people are. I actually think, and this obviously is an investment advice, I actually think a lot of these tokens will go up in price simply because they are now under the YEarn umbrella, right? So they have the YEarn meme power. That's actually a big thing. It might sound like a joke, but meme power is a big thing when you're investing in these assets, especially the smaller cap ones that are easier to move. Their TVL is going to increase because they're under the umbrella. They have direct kind of like interactions with all the other protocols surrounding it. And there's like a bunch of other stuff that's going on here that is going to increase those prices. So yeah, let's see how this goes. YFI's actually, if we look at the chart here, right, the mergers went through, I guess, like over the last week. So if we look here, YFI's just been ranging, right? It went up to like 27K, came back down to like 17K, and then, it's marched back up and is about basically where it was when these mergers started happening, I think. So it's hard to say if this is just a normal recovery with the rest of the market, since the rest of the market is pretty bullish right now, or if YFI is actually getting bought by people who think that it's going to accrue value because of these these partnerships. So it's difficult to say. Though I do think that YFI is going to go up regardless, regardless of I guess like the partnerships, because they have their own ecosystem as well, right? They have the vaults and the V2 vaults coming and a bunch of other things that they're building around this. So yeah, it's going to be interesting to see how the YFI ecosystem or the YEarn ecosystem continues to play out. I think Andre and the team are pretty ruthless. They really want to win, which is really great. Full disclaimer, I own YFI. I think it's pretty obvious from my tweets about it over the last few months, but really bullish on the project in general. I really think it's great. But as I said, not investment advice or anything like that. Just me speculating on where I think these things can go. And it's a bull market, right? We won't know the fundamental value maybe until the market comes down a bit. Maybe everything just goes up with Bitcoin, which seems to be the case in bull markets as well. So going to keep an eye on that for sure. All right, so Ryan Watkins from Masari put out this great ETH2 thread where he basically says, ETH2 is finally here. It's going to transform Ethereum as we know it. And he goes through a few of the things here got to do with Ethereum and ETH2 in general. So he had a really great description of Ethereum, like a one-liner here, where he says, Ethereum is a global public good that is open, borderless, neutral, transparent, and censorship resistant. Ethereum provides a system of property rights, rules, and economic opportunity for anyone in the world with an internet connection. I think those two sentences basically sum up what Ethereum is and why it's so exciting. And then he's got like a funny little picture here of this, I guess, like this kind of, I don't know what it is. It's funny. It's like a Photoshop with ETH on its face, ruling over this kind of town here, but. Yeah. Anyway, as we scroll down here, we can see, he's got his thread. Basically, I won't go into detail about the thread here, but then he links to this, the Road to ETH2 kind of Masari research report done with Bison Trails. It's quite dense, I think. I actually think it's, I don't know if it's free or if it's paid. I think it might be paid, but you can like start a trial here and get it for free. But basically, he's got the kind of like breakdown here. So they go through the philosophy of ETH2, the history, and then goes through like each of the phases and how they're going to work, and then the conclusion. So it's a 68-page report. I haven't read it yet, but Masari is their research arm is amazing. I read a lot of their stuff. So I can only assume that this report's going to be great. And like, as I said, it was co-authored by Bison Trails, which is a kind of like staking company, and they're amazing as well. Victor Bunin from there writes some really great ETH2 posts, and he really understands what's going on in the ecosystem. So definitely I'm going to check this one out, and I suggest you do as well. Link will be in the show notes and the YouTube description, of course. So definitely go check that one out. So, Real Vision. So, for those who don't know, Real Vision is this kind of education platform for not crypto. It does all of finance, business, and like the economy in general. But they've got a crypto arm as well. So they started with Bitcoin, of course, educating people about Bitcoin and things like that. But now they're moving into other kind of chains, and specifically Ethereum. And recently they released a 95-minute documentary on Ethereum. And this was basically, with Vitalik, they had Joseph Lubin on board, Kane from Synthetics, Hudson Jameson from the Ethereum Foundation, Alex Saunders from Nuggets News, Paul Brody, those of you might know him from EY, they did a bunch of privacy work as well. Ash Bennington he heads up Real Vision Crypto, and Raul, who is the founder CEO of Real Vision, basically. So yeah, I haven't watched this yet. I'm going to. I think it's free. I'm pretty sure it's free. And basically, what this does is it tries to break down Ethereum, ETH2, ETH, all this sort of stuff for the newbie investor or newbie kind of like person who's interested in this, because that's what Real Vision's all about. I mean, I heard Raul on a podcast say it's about democratizing access to this kind of knowledge and information around finance, because so much of it is actually, usually like behind paywalls, or you have to dig through a lot of different complex things to find the information, and it's hard. So that what they're trying to do is kind of democratize the access here. I've heard this is for people that have watched this documentary, that's actually really great. It's a really great intro for new people to Ethereum as well. It gives a bunch of different perspectives. So definitely go check that out. I mean, I'm going to check it out regardless. Like, obviously I'm not new to Ethereum, but I think that it's always good to watch these things to hone in on your own knowledge. And, there's probably things in there that you've missed or haven't thought about. And the people that they have on board in this interview are great, right? Like, not just Vitalik, obviously, but Joseph Lubin has a lot of context he can give from the consensus side of things. Kane from Synthetics and DeFi in general. Hudson, Hudson does a lot of core developer stuff, Ethereum Foundation stuff and things like that. And Alex Saunders, obviously from Nuggets News, he's really great in the ecosystem as well. He does a lot of education there too. So definitely go check out this documentary. As I said, it's free. Will be linked in the show notes. Finally, little tweet from Banteg or Bantaji. I don't know how to say his name exactly. Basically, he's a core dev. He or she. I don't actually know if their identity is known, so it could be a she. But basically, they're a core dev at YEarn, and they put out this funny tweet today. It reads, "I probably used Bitcoin twice since the last all-time high. Once to buy a ledger, and another time to wrap it on Ethereum, like to bring it to Ethereum," which I thought was quite funny because, really, I mean, what else are you gonna do, right? Like, if I held Bitcoin, then I would literally put it on Ethereum to earn yield on it, in DeFi. I wouldn't put it on like BlockFi or one of these other centralized lenders because I don't trust them, frankly. And why would I do that when I can do it on Ethereum? In saying that, when you bring BTC over to Ethereum, most of the solutions are centralized, like wrapped Bitcoin and things like that. And the quote unquote decentralized ones still have, I guess you can call them admin keys or central points of failure. But I thought the tweet was funny because it just shows that Ethereum is this, I've written about this before, but Ethereum is this economic nexus of value, basically. So all these assets are just flying through Ethereum, they come to Ethereum and then they basically stay there and do all different things, on decentralized exchanges, in lending apps, earning yield, all these things. And a fun fact about BTC on Ethereum, I haven't actually seen the chart go the other way. So the chart that I look at is actually at btconethereum.com. Maybe I can bring it up here for you guys. Sometimes it takes a little bit to load here. But basically, while that's loading, so I monitor this. I watch this. The Bitcoin doesn't seem to be going back to Bitcoin. It stays on Ethereum once it's on Ethereum. Hey, here we go. You can see the chart here. So it's just straight up, right? It hasn't gone down at all. It's gone straight up, and it's flattened out a bit here, I think, because obviously, as we had such a meteoric rise. I mean, for those that aren't watching and they're just listening, here it was 1,000 BTC on Ethereum in basically at the start of this year. It is now 148,000 BTC on Ethereum. That's almost $3 billion. And as I said, none's gone back, right? It's all, I mean, some would have gone back, but like a very small percentage has gone back. You can barely see it on the chart. And most of it stays on Ethereum. Again, Ethereum being an economic nexus, having this massive gravity pull on other assets outside of it. We see more assets coming to Ethereum now. There's going to be Wrapped Filecoin, I think Wrapped Dot, wrapped everything, right? Just bring it all on Ethereum, because most people don't want to even speculate on these things if they're not on decentralized exchanges. And people want to use these assets to generate yield. Like, I don't want to hold an asset that I can't actually use as collateral or generate yield on, because it's just a dead asset, right? Like, why am I holding this? To get price exposure? Yeah, sure. But, it's better off me holding like ETH, getting price exposure to that and using it as collateral to do even more things like yield farm with stable coins, or some people use it for leverage to leverage bet on things. So yeah, definitely really cool to see that playing out, but speaks to Banteg's tweet here about there's really nothing to do with your Bitcoin on Bitcoin. Just bring it to Ethereum and you got a whole world of options there. All right, last thing that I don't see basically anyone in the Ethereum community talking about, and it's quite funny that this has happened basically as we're about to launch proof of stake. So Ethereum's mining difficulty and hash rate are at new all-time highs, which is quite insane, because you can see on the chart here that Ethereum's hash rate actually was flat for flat or like a little bit positive for basically 2019 and half of 2020, and only recently has it shot up. So it went from basically in July, it went from 177 terahashes to 265 terahashes, which is an all-time high. The last all-time high was 242 terahashes in July of 2018. So it's been quite a while since we've seen this hash rate go up. And this is obviously because the price has risen and also the fees have risen. So miners are actually earning a lot more from fees now than they once were. So there's been like a renaissance in Ethereum mining, which is funny because we're on track to kill Ethereum mining, right? To kill Ethereum proof of work. So I'm wondering what's going to happen to all these miners once that happens, right? We're going to do that in the merger, which could happen in a year and a half maybe. So what happens to all these miners? They could move to another chain, but there really isn't that many other chains that actually share the same kind of mining algorithm as Ethereum. I think maybe Zcash does from memory, Ethereum Classic, things like that. But they're nowhere near as lucrative because their prices of those assets are much lower. So I guess we'll see where this hash rate ends up after the merger. Maybe we have like a miner fork where the miners are like, we're just gonna fork ETH1 and continue it on as like ETH1 Classic or something, just so we can milk some money out of it, which I fully expect to happen, by the way. I fully expect miners to do this, and it's not, that's not going to be the real kind of ETH1 chain or anything like that. The real ETH1 will be merged into ETH2, but there's always opportunists whenever you have something like this. We saw this play out with all the other forks as well. Like Monero had a bunch of forks as well. When Monero bricked the ASICs on the network, they had like other forks that spawned off of it, and they accrued some tiny amount of value. So this isn't new, right? So yeah, but just something I wanted to point out for people that may or not have been paying attention to this, that the hash rate's at all-time high on the day that we're launching proof of stake, which is obviously the aim to get rid of this. So just a funny observation there. All right, that's it for today, everyone. I've recorded this about 2 hours before ETH2 has gone live. So you will either be watching this just before ETH2 has gone live or after it. I'm going to focus most of tomorrow's episode on ETH2, of course. I wanted to get this out before then because I thought there was a lot of other interesting things to talk about today rather than ETH2. So definitely subscribe to the YouTube channel if you haven't to catch tomorrow's episode. I assume it's going to be a really fun one. And definitely go subscribe to the newsletter, the Daily Gwei newsletter, and check out our Discord channel. So yeah, thanks everyone, and see you tomorrow.